Hey guys, Dave with Moniology here. Hope everyone is having a great weekend. This is the weekend market review for April 14th and 15th, 2018. Let's take a look at what's going on in the markets. Starting with the 10-year Treasury Yield from a daily perspective. This looks like it wants to move higher. This RSI trend line here has been broken to the upside, and now while it might consolidate, it's above the middle Bollinger Band, above the 50-day moving average. Looks like it wants to retest that 2.9 area on the 10-year. Look at the PPO has crossed zero level here, so that's a very positive development. On the weekly, we found support right at that 60 level, coincided with the 2.6 level that I suggested would be credible support right above that Bollinger Band. Looks like it wants to move higher to break through that 2.9 level, likely moving towards that 3 level very soon. Now the PPO is below zero, so that's something to be cognizant of, but it doesn't look at this point like it's going to make many bars below zero. Might actually curl higher shortly. Now looking at the monthly chart here, this is a very bullish chart. We broke out massive hammer candle. We had a very nice bullish flag here, broke out of that, consolidated another hammer candle. Now we're consolidating another bullish flag here, albeit a smaller one, right below the 3 level, and with powerful RSI finding support around that 60 level. Looks like this wants to break higher and soon. Gold on the daily chart, it's still consolidating below that 1350 level. But all things are pointing towards a resumption of this move higher sooner rather than later. It's trading above the middle Bollinger Band, above the 50-day moving average here, and sooner rather than later it looks like it's going to break higher. Now on the weekly level, it's still consolidating above the 50 RSI level, above the middle Bollinger Band, above the 50-week, 200-week moving average. There's just so much support. PPO is starting to curl higher here, and it's going to happen very, very soon. So this is a sector you really want to keep your eye on. From a monthly perspective, this one broke out from this 5-year downtrend here. Now it's consolidated, and now it wants to move higher. Once it breaks the 60 level on the monthly RSI, this can really fly and really fast. Junk Bond Daily. This is the one chart that led me to believe that the markets are actually getting ready to make a move higher. It double bottomed with positive divergence, and so with RSI leading the charge here, it suggested the markets were ready to actually start moving higher once again, and this pullback likely in the short term was over. Now looking at a weekly chart, here again we broke above the 50 RSI level, very strong candle last week above the middle Bollinger Band, and looks like we want to move higher and possibly test those highs at 3650 area. And PPO again is curling above, or curling towards a move back above zero. On a monthly level, we found support at the middle Bollinger Band. That's a very positive development. Now we still need to break above that 69.70 level of RSI. Should it do so, we likely make new highs in junk bonds, which is a very positive development. But that being said, PPO has curled pretty heavily below zero. So while the charts are suggesting that likely resumption of this move up is the highest probability, there are a lot of things that are suggesting that would not surprise me of just a shock to the markets to the downside. There are a lot of cracks, but that being said, the charts are still bullish. Crude oil contract, we had a shakeout here from 66 to 62. I thought we were moving higher, then boom, and went lower. Then now we had 5 consecutive very strong candles here. Led by RSI breaking out. So crude definitely wants to move higher here. Looking at this chart from a weekly standpoint, we're above 61 level. We had a massive hammer pattern up almost 9% last week. Obviously that's tied to some of the geopolitical events going on, but let's be honest, we had geopolitical events going on here and here and here and here and here, and only here have we broken out. So something's definitely changing in the technical picture in crude oil, and then, again, we've called this kind of inverse head and shoulders, and we've suggested that we're going to head 75 and 80. We even called out the great Peter Brandt, who said around here that crude oil is going lower. We said no, crude oil looks like it wants to move higher. There's just a lot of positive divergence, and so far we've proven to be accurate in this particular viewpoint. Monthly, this is the inverse head and shoulders I was referring to, and now we're breaking higher. Likely target is around that 80 level that we've called for several months ago. Now looking at the Nasdaq Daily, it's gonna be interesting what happens here. We're right below that 50 on RSI. There's a lot of resistance at that 50 level, and we had a very negative candle below the 50-day moving average. If we can't break above that level around 71.58 this week, then we likely pull back. However, if we can break above it, then there's a lot of green pasture to run. On the weekly standpoint, we close the week above the 50 RSI. It's a very bullish development. You want to see it. Bulls want to see this move basically above that 75-90 area. If it can break above that level, then there's greener pastures from a longer-term perspective, but it's got some work to do. On the monthly, it's exceptionally overbought, but that's precisely where you want to be if you're a bull. But PPO is continuing to curl down lower here. So if PPO crosses below 0, that can be a negative shock to the market. So something to keep an eye on for. And Russell here, it's kind of consolidating, not much direction here, but it is above the 50. So see what happens this week. Now on the weeklies are suggesting more of a bullish development here. It's consolidated above the 50. Now it's curling back higher. It's found support on the 50-week moving average consistently. 1, 2, 3, 4, 5, 6. So ever since 2016, this 50-week moving average has served as support, and so far so good again here. On a monthly level, you want to see a break above 69.70. If you can do that, that's very bullish. If it can't, that would be considered a very bearish development, especially considering the PPO has basically curled and is hovering just around 0. S&P is actually the weakest of the indices right now, which has not been the case this year, but so far it's found some support, but it's closed the week just above the 50 RSI level. You want to see what happens here. Does it break lower? Does it break higher? A lot of indecision so far, but my hunch is with all the support right below the 50, I think it's going to be moving higher before any resumption lower in the coming months. On a monthly level, it's below 70, but if it can recapture that level, that can be a very positive headwind for the markets. The US dollar, it's been consolidating here, building a base between that 88 and 91 level, but it's still below the 50 RSI. So until it can break that level, this is what I'm talking about. Until it can break above 92 on this weekly chart, I still have to assume things are going lower, but there are a lot of positive developments, including a lot of positive divergence on RSI as price consolidates. Momentum is building towards a move higher. PPO is above 0 now. Stochastics are starting to look good. So a lot of positive developments, but price still needs to ultimately sell the final picture. From a monthly standpoint, it doesn't look good. I still think we're going to hit 80 before getting back above 100. VIX looks like it wants to move lower. It looks like it might consolidate here. Now it's above this trend line, so so long as it stays above this trend line, it could go all the way to 10 and still be considered bullish here. But from a monthly standpoint, or rather weekly standpoint, so long as it's above 50, that's positive. If it's below 50, you want to see it still hover above this trend line here. Let's just extend that really quickly. Just like that. You want to see that hold. If it does, that's positive. If it doesn't, then that likely means that this spike in volatility is likely over. And here it is from a monthly perspective again. Finally here, the world charts look like this is a weekly perspective. Look like he's starting to move back higher. I think that this may have been it for this particular correction in the market. So if you missed this this move to the upside, well, this might be an opportunity to get back in. But anyway, this is a positive development if you're trading to the upside. And monthly standpoint here again, found support at the 60 level. No surprise, above the middle Bollinger Band, above the 50-month moving average, likely heading to 2400 here before resumption to any more downside. Anyway, guys, thanks for watching. I appreciate all your support. If you appreciate these videos and like the work that I'm trying to do here, please check us out on patreon.com/Moniology and pledge your support. Anything will go a long way towards helping us hit our $1,000 goal. $1, $5, $10 a month, $25, etc. will go a long way. Appreciate it, and have yourself a great week.